Hello, Thursday. Right, let's start in the United States of America. NFIB Small Business Optimism Index. And this goes back to 1985, and you can see all the way up till 2005, it was just bouncing around that line of 100. Everyone was just jollying along jollily. But from 2007, it came obviously crashing down, and it's really not struggled its way back up. And you can see that's what they're on about at the moment. Small business confidence is down again, that last little pointing down, as so many things are at this very moment in time. Last few things have been pointing down. Moving on to market value of household real estate. This is from the chart store. And we can see from, it goes all the way to 1952, and household real estate, the actual top line, bottom line value of the whole lot, peaked in the fourth quarter of 2006 at 23 trillion. The value at the end of the first quarter of 2011 is 16 trillion. Down 6.6 trillion. We've done it before, but it's quite an incredible drop. That 23 trillion down to 16 trillion, over 6.5 trillion drop in value of real estates. Yep. US retail sales, they were, depending which way you looked at it yesterday, some people said they were up, some people said they were down. But again, just look at the overall shape going back to 1992. Generally, it's always been so wonderfully uppity up, hasn't it? And then that drive down, and then that push back up again, trying to re get going again. And you can see it's flattened out, stroke turned down in yesterday's US retail sales figures. So going to calculated risk, and key question, is the slowdown temporary? Calculated risk, where I get so many of the charts from, and obviously he's more than charts, he's thinking about these things. He writes, the recent economic data indicated a slowdown in May. Only 54,000 payroll jobs were added. Apparently over half of the private jobs added that month were at McDonald's. Funny statistic that. Payrolls were added. Auto sales declined significantly. Retail sales were sluggish, even excluding autos. All that sort of bad news stuff that we know about anyway. But if you read the article, you eventually get to the bottom line. Calculated risks, bottom line. So for now, I'll stick with my general forecast for 2011. Growth will remain sluggish, but I expect 2011 to be better than 2010 for both employment and GDP growth. And there it is. With all that pessimism around, it's still forecasted by this extremely reasonable chap to be better than 2010. And it's mainly obviously predicated on the fact that the budget deficit's still going to be about 1.5 trillion. And that money does go somewhere. It goes into GDP and must help with employment, mustn't it? Money Games chart of the day. Do you expect QE3? These are the professionals in the business asked whether they expect QE3 to be coming any time. And as you can see, the red line is just about everyone says no. You couldn't, well, not. But if you stack the blues up, the blue lines that are for yes, second half of the year, yes, 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 but at various times, it doesn't nearly get to where the great big red line of no is. So the experts are not expecting QE3. Moving over to China, and just a hint or a tip to read an article if you're interested in China's water challenges. China is short of water, quality water. A quick question and answer with environmental historian Kenneth Pomerantz. It's worth a read if that's the sort of thing that blows your dress up. Dubai cancelled over 200 property projects. Dubai said that they had to cancel these projects because there was not much chance of them ever being built. They're pushing ahead with plenty of others, but They're being a bit more careful there now. And that photo is apparently heavy fog rolling in early morning near Dubai Marina. I've spent many a happy time in Dubai Marina. Never seen a fog like that, though. I wouldn't recognise it now. It was a long time ago I was there. Financial Times will finish here with a tale of two UK inflations. And just to note, this is saying UK inflations, but it's the same in the United States and here in France and other places as well. It says the top table 3 budget share and price changes for selected goods, etc. But if we drop down to where it says food and shuffle along to poorest 20% and richest 20%, we get just the numbers on a fact that we obviously know, that the poorest 20% spend near 20% of their income on food, or is it outgoings? Either way, eh? And the richest only 10%. Domestic fuel, let's say 10% for the poorest and 5% for the richest. Mortgage interest, not much for the poor because they don't have mortgages, and the richest 8.7%. So if we drop down to the lower one, table 1, average inflation rates, and under average inflation rates, we've got 2000 to 2010, and over on the left we read the lowest income. These are the quintiles, and then 1, 2, 3, 4, and then up to the highest income, the 5th quintile. And it's pretty much the same from 2000 to 2010. They've given a number for the actual inflation rate for these various quintiles, and it's 3.3, 3.33, 3, 2.9, slightly less for the highest quintile. But over in 2008, 2010, in this recovery effort where inflation seems to be part of it, we can see the lowest income quintile inflation rate is 4.3%, higher than the second, a little bit richer than them at 3.9. The middle one is at 3.4, the just under richest people at 3.1, and the highest income people only have an inflation rate of 2.7. That's because the mortgage rates have come down and they don't spend as much on food and fuel as the poorer people. So this is all round pretty good for the rich people, but it is really crushing the poorer people, and the poorer you are, the more you're being crushed by this method of getting out of the financial crisis. See you tomorrow. Bye.